by buying Palantir at an average price of 8, I know that even if Palantir grows in line with a guidance or grows at 20% rather than 30%, I'm still fine, because the returns that we get over the long term are the combination of the business growth and the multiple expansion or contraction. So if the business keeps growing at 20% for many years, the returns we will get will converge to that 20%. And there will be an expansion or a contraction of a multiple that will get you to the real return. So with Palantir, for instance, right now, the growth expectations is around 30%, assuming the multiple stays flat. So let's say now on, Palantir will always trade at a price to cash flow of 27. The stock must grow some 20-30% to stay in the multiple. If that doesn't happen, it means that the multiple gets so compressed that after a couple of years becomes so cheap that it's very hard, people will not notice it. In practice, what I mean is now is 27. After 2 years of 20-30% growth, this multiple can become 15. And at 15, I would say, is an easy buy for any asset managers. So this is the margin of safety I want to have when I buy a company. Because with Palantir right now, I know that even if the multiple stays flat at 25, 27, with the business growth, I can already have some 20-30% growth from the underlying business. That will be reflected into the price.
So basically, with that piece of it, with what you just said, with the price that it's at, you feel comfortable that smart money is going to get in 2 years, and then that price share is going to go up to where you want it to be, because it's within a very affordable range that asset managers would have to go in, right?
Yeah. I would say, would you buy Palantir at the same cash flow yield of buying a house? Of course, Palantir is much better because it grows more and it has a lot of optionality. With a price to cash flow of 15, you have an earning yield of 7%, if I remember correctly. So it starts getting really appealing if you consider it as a bond. Let's make this extreme example. Palantir is a bond because its contractual revenues are recurring, and it gives you the same amount of free cash flow every year, assuming that there is no dilution.
Okay, well, that's a big piece right there, right? Like you just brought a big. So when we were talking on Twitter this morning, I didn't realize till I saw the Brian and Brian video about Palantir, was that if you look at the share price right now at 10.30 or whatever, it's basically almost at the DPO price, but the market cap is 30% larger than when it went public. So literally the company has diluted shareholders 30% of the value of the company. Do we think that that is going to continue? I know it's decreasing, but it's still high. Do you think they're going to continue to decrease at a much more aggressive rate?
It is going to decrease now, probably in the next quarter, 2 quarters. There will be the counter effect of them hiring a lot. As we also shared on Twitter, while there is a massive layoffs from tech companies, Palantir is hiring aggressively. And when you hire aggressively, you also encounter in cash expenses, but also in granting stock-based compensation. But what I learned, this is something I never seen before, is that there are clauses in the equity plan that allow the company to pay in cash the stock-based compensation. It's called cash settlement, which means that rather than issuing new shares, the company can deliver the stock-based compensation in cash for employees. This way, the number of shares don't increase further. So that could be a solution that probably Palantir will adopt in order to mitigate the dilution aspect. And they have 2 billion cash to support that. also with free cash flow. The problem with stock-based compensation, in my opinion, is not much in terms of the amount, but is the company always able to grow more than it is diluting? Because if a company grows 30% and dilutes 5%, your net growth is 25%. And then you compare that growth to the price you pay in terms of free cash flow. So that is why at this price, I'm confident with Palantir, even if there would be a 5-6% dilution, because that would be compensated by strong free cash flow growth. At a higher price, I would not.
Well, I think last year they diluted at 11% for the year.
Yeah, 10% for the year.
Yeah.
Right now should be more around 6-7%. And when they said we are targeting a normalization, in aligned with other companies, in my opinion, is their target to be around 5-7%, like ServiceNow, AMD, these companies that I would say grow a lot and could be considered in the tech space.
Yeah, hiring good engineers is not easy, especially if you are trying to get people enticed to join your company. If you're not going to let them be a part of your equity structure, you know, people right now, especially in the tech sector, they want to know that what they're going, just like us, what they're going to do is going to be exceptionally valuable in the future. So in order to attract that talent, you're going to have to give up equity. If not, and you just give them high salaries, you know, that they could leave at any time, and it's going to be valid. It's literally, they're just leaving with your cash. So Palantir did the smartest thing possible, knowing that their stock was overvalued, by doing more share-based compensation when your shares are worth $25-$30. Imagine right now hiring someone, giving them a equity package that's based on a $25 share price, and then a year later it drops down to 10. Think about that employee. Their compensation was $300,000, but technically you were able to get them at a discount at $150,000, right?
And they're not going to leave on a down. You know, most likely they're going to stick it out to get their money back,
right?
You know, and I'll just make one comment and let you finish. There I was talking to a friend of mine who's a VP somewhere, and they were looking at retiring, and they said, "Dom, you're not going to believe the RSUs they started throwing at me when they heard the idea of me retiring." And he's like, "I can't not take this. Like, I know, like, yeah, I had an idea of retiring, but if I can just stick it out 3 more years, I have to take this opportunity." So I'm kind of feel it reminds me of Palantir in that it's like, if you get this top talent and you're able to keep them on this extended time frame, as long as the free cash flow is growing more than the dilution, then I guess, you know, why do we care so much?
Listen, right now, Palantir could let go half of its sales, half of its workforce, become super cash flow positive, and use that cash flow to buy back shares. But within 5 years, they'll go bankrupt. Guaranteed they'll go bankrupt, right? Is that the type of company that you want to invest in, or someone that's growing constantly, growing their platform, growing more things so that they become more entrenched into the economy and they end up becoming that exponential grower? So it's the same thing. Everyone who didn't buy into ServiceNow and CRM and all the other big SaaS players, dilution has always been a chief complaint among anyone in the early stages, because it's like, oh, even Alibaba, when they first came out, you should have seen the articles that came up. Oh, look at all the share-based compensation, how much of their profit is going towards SBC, not realizing that SBC, right, eventually becomes much more smaller part of their revenue mix, and they eventually become really profitable and really good. So I think that's where we are. I think we're very early in the Palantir growth prospect phase. It'll be interesting to see where they are 10 years from now. But in my opinion, they're not going to be anywhere near where they are today, especially if they execute. And it seems like they're executing all over the place. So I think it's going to be definitely one of those things that we need to monitor closely for the next 5 to 10 years.
What metric in particular?
For what?
For the execution path of growth of Palantir.
So while a lot of people want to consider just revenue, I'm not a big fan of revenue. I want to see more clients. I want to see more adoption, because I think is, you know, a lot of people, they focus too much on just revenue and not about market adoption. Because once you get a significant portion of market adoption in an industry, you become the default leader in it, right? So an example is right now with CRM, right? CRM is the default, like Salesforce is the default operating system for anyone that's using customer relationship management software. They were able to get that market share, and now they're so entrenched into that industry that they've become powerful, right? And no one can touch them. So I think with Palantir right now, their goal to be the operating system of corporations, they need to keep capitalizing on that and get as many companies and industries to adopt them, so that in the future, a company, before they even consider you know, anything, they say, oh, well, we need to get our Palantir, you know, situation together, so that this way we can, you know, we can operationalize all of our business decisions. So for me, I don't necessarily care about revenue growth as much as about growing their customer base. And I think that's where they're lagging behind a little bit, when you, especially if you compare them to like something like Snowflake, where Snowflake's like 10, 20 times bigger in terms of total customers that are out there.
Sorry, one question. How much time does it take to plug Snowflake on your enterprise?
A week, maybe 2 weeks, easy. The training part, like the data science teams and everything else, probably like between 6 months to get everything together. But it's not hard. It's really not hard at all.
So you don't need a pilot to get approved?
No.
Okay, I think that's the crucial difference with Palantir. They already shrunk the time from 6 months in 2020 to 2 months. And we already see the client acquisition going faster, but probably unless they really have a very light module, it's impossible to go very below that 2 months line.
There is one problem with Snowflake in that, yes, you can get all your data, you know, stored on the data lake and everything else, but the utilization and the business value is all completely dependent on the client, right? Whereas Palantir makes it much easier for you to actually use that data correctly, right? So as an example is, this is a tool, like, so Snowflake is something that a data scientist would use. Palantir is something that your frontline staff could use, you know, and become easier with it, right? Because they're taking that data, like, you don't need a data scientist to go in and massage all this data and do this extra stuff. Snowflake, that's why it's easily adoptable. But at the same time, in terms of getting business value out of it, is much harder, which I think Palantir has been proven that they can get more value. But like I said, it's adoption that's going to be a hard part for Palantir.
I would say,
So
probably,
with that, oh, go ahead, Arnie.
I would say if we can synthesize, probably the best metric to track how Palantir is growing well is to check, is the growth in the clients growing faster than the revenues? Because that means the client acquisition is very, very strong. Up to now, we are seeing that because 2 years ago, it was basically in line, while in the last quarter, the client growth, like the clients doubled year on year, while the revenues grew some 30, 40%. I would say as a proxy, until we have this combination of the number of clients growing much more than the revenues, it means that we're executing very well. If we will see the growth in the number of clients stagnating, that would be a red flag.
Yeah, I mean, I think one of the things, because Kris, we both work in this world of tech and working with IT managers and teams, we also know how stubborn teams are when it comes to doing on new tools and what they actually want to submit for budget. And let's be honest, Palantir is not cheap. So
25 million.
Yeah. I do know that some of their modules are more affordable when you talk things like HyperAuto and things of that sort. But it goes back to the POC piece that goes to getting the right stakeholders involved to have that meeting to show them that they can get this kind of business value out of it. And do they want to put that time into to learn a new technology and to invest there? whereas you have things like Microsoft, Snowflake, and others that are already entrenched in the environment, and they can add to their agreement, or they can make it very easy. I'm not disagreeing with you, Kris. I think there's way more value out of Palantir and what it can do. But sometimes I feel like, we've even trying to get our internal organizations to want to use Palantir, getting people to get out of their normal routine and what tools they use sometimes can be a pain.
If I can jump in, I would ask you a question. I read an old article written in 2008 by Palantir itself, explaining why they are an operating system. And talking about operating systems, they shared the idea that in order to be valuable, an operating system must have applications built on it. And the same can be said about Palantir. But for the operating system to be really spread, there would be probably need one application, one killer app that reach the mass adoption. In your opinion, is there already a killer app that could bring Palantir to all the companies? Like, is there one product, that Palantir is offering that is absolutely needed to all the companies, but up to now, no one does it? I have one idea, but I'd like to hear yours first.
Unfortunately, for me, I don't necessarily think so. What they're doing can be replicated, but it can't be replicated for another 5 years. But they're losing that. I'll tell you right now, they're losing their window of opportunity to capitalize on being able to execute their vision. Other companies are already sniffing around and looking at ways that they can create a similar platform to what Palantir is already doing. And if Palantir misses out on being a market leader, here's an example. At one point, they could have introduced a data warehouse back in the day when they had it. They missed the opportunity, right? They really did. And it's happening again a little bit right now, where there's other companies out there like Databricks and Snowflake that can actually recreate some portions of it. And because they have an entrenched sales model into their already organizations, it's literally like an additional product, whereas Palantir is trying to get themselves completely new into the organization. So
for me, I'm just looking at Palantir's website here. Let me share my, I'm not on mute, Kris is. Okay, so here, I think when we look at Foundry, let's go to, here we go. So you can buy Foundry as like a data integration, or for instance, in HyperAuto, you can get all your stuff put together into one platform, fairly easy, fairly affordable. But you pay for a whole nother piece of it when you talk about creating a digital ontology. I believe the ontology is the valuable asset that opens up all the different use cases for customers getting decision-making out of their data. And so
HyperAuto is detached from the ontology.
Say that again?
So if I understand correctly, you say that the HyperAuto component is only related to the data integration and is detached from building the ontology.
Well, so all these products, so you have like HyperAuto. So HyperAuto's software-defined data integration that they do with things like ERPs and CRMs, it's able to combine all those data sources and make it usable to have all that data static. But there's difference from having the data static and having the data actually be, as you see here on the screen, being able to have all the drop downs and modules where you can actually see that data and then start getting options to look at if then do this, and being able to do it very quickly through a point-click GUI to get the data that you want. That's the ontology, right? That's the subset of all the data that's putting in the related relationships. That's what
to get the ontology, what do you need? You need the data to be integrated, right?
Right. You need it first, the data integrated, but then it takes a lot more services and hand-holding to build out the actual ontology. And so what I like what they're starting to do is modularizing that ontology. Like, so they have supply chain. You've seen that they've done several LinkedIn demos of supply chain. We know there's a lot of issues in logistics and supply chain across the world. If I'm them, I think they are doing this, I would be hitting all of the major organizations and verticals that deal with supply chain. Like they have Merck for semiconductor. So my hopes would be they would be working with companies like NVIDIA, AMD, Taiwan Semiconductor, all these others that deal with things like that with supply chain. And then once you got a couple of customers that really love the product, leveraging them as those references and how much money they saved. Another thing that we've talked about before is, when you look at, if we go down here, you can see like Pacific Gas and Electric using Foundry. One of the things we want to see is where's the monetization return on investment? Like I see all the stuff here about the challenge, the solution, the impact. What's the dollars that they saved because of this? Mm-hmm. And them to come back and say, yes, if you're a electrical gas company or whatever, energy company, and you want a tool that's going to help you reduce time to value, Palantir Foundry is the thing that you want. Like I see that in Snowflake. I see that in almost all, we do it in our case studies, hey, you saved X amount of millions of dollars because of X, Y, and Z. I don't see that a lot from them. Do you guys?
Yeah, for instance, in the Hyperauto component, they explicitly say we helped BP to save 50 million a year by managing the IRP so that a lot of credits are unlocked.
So that's what we want to see, right? We want to see more of that. How much money are they saving Ferrari? Obviously, they're winning a lot more races. So we know yeah, we're doing something there. But what do you think, Kris? I mean, you've seen a lot of companies in this world and how they do case studies and reference, because they're trying to win industries here is the way I would imagine because of how they're building these offerings.
I think Databricks is eating their lunch. I'll be honest with you. There's so many. Every time I ask people about Palantir, no one knows about them. That's the hard part. That's the hard truth. That's really the hard truth. In the data science world, you would think that more people would be talking about Palantir, and there are not enough people. Anytime I talk about anything AI, machine learning, data science, they say Snowflake, they say Databricks, and that's it. So
there's a brand awareness challenge there. Then
significant. But guess what? Everyone's already learning how to use Snowflake. Everyone's learning how to use Databricks. So what interest is it in learning a new platform? Like, where's that developer community? And that's something that Coach Strap has said a long time. Like, where's that developer community willing to work with Palantir? And why isn't Palantir developing a developer community so that they're able to go out there and teach? Because right now, most IT leaders, they're not going to go with Palantir. They'll say, you know what? I went to a course and I did what I had to with Databricks and I've been certified with them, or I got certified by Snowflake. Guess what? Let's bring them in. Let's bring Snowflake.
Don't you think they could change that too? If they started, let's just say they took a road show and started hitting all the major cities and saying, hey, we're going to do a genius bar set up for 8 hours for this day. Invite all your developers and we're going to get your hands on with Foundry or Foundry for Builders or whatever.
That's what I'm saying. Right now, even if they have a superior product, no one knows about it. So at this point, what are you going to do to change that? And they're not making the proactive decisions to do that. Where have you heard a last time? Huh?
Why, in your opinion, are not
I don't
exploiting?
I don't know. That's the question. That's the $1 million question, right? Why aren't they developing a bigger developer community where they're actually going out, doing conferences, talking to tech leaders in different spaces? I mean, you look at, let me share my screen real quick. Hold on.
Oh yeah, sorry about that. I didn't know if I was still sharing. Am I still sharing?
No, this one. Can you see my screen?
Works.
Yeah.
Yep.
Yeah. You look at, this is Databricks, right? They're working with literally every company that you could think about. Like the list is just on and on and on, man. Like every single industry that you could think of, they've already hit. They've already got people so entrenched into their into their data science and machine learning journeys and what is that thing called? Digital transformation journeys, that Palantir is going to have a much harder time.
Wow, that's interesting. Look at that. You see Wheat Joe.
Yep. I'm telling you, I can't. I probably get tired of clicking more than that. Can you say the same thing about Palantir? And they have some really big customers. So, like I said, right now Palantir is in a very bad position in terms of getting more clients, because if they don't hit those clients, I don't know. We'll see.
Well, I'm more financial related. What I really noticed is on things you see shared on Twitter, Palantir is never considered in the cloud business. In all the charts, tables you see on comparison on cloud, this very morning, I saw the very first post sharing, hey, Palantir among all the cloud sector is the one with the highest annual contractor value. That's it, the first one. But after that, apart from that, I'm getting used now when I see the multiple of the clouds, the tables of the clouds. Palantir is never there. Neither in the Bessemer Cloud Index, which was considered like a very useful benchmark in finance for the cloud segment.
So do you think they're aware of this and that they're working on something to change it? They have to be aware. Surely they have to be aware, and that there's, people are very aware of the YouTube community, and I would have to think that going after new business, that people like, that they know they have a brand issue.
Could be because people still think they are a consultancy. Because that is very spread. I see it from the comment I receive. I don't know, even from people who seem more technical, like people working in the industry have been said, oh, no, it's consultancy.
I think they could really fix a lot of this. And we're saying fixing it. The company's doing fabulous financially. When you look at the revenue growth, the balance sheet and everything else, but we're talking about how does this company stay relevant and continue this growth 10, 15, 20 years and be the dominant player. Having a freemium model, man, just getting Foundry in more people's hands, I think really opens up the things. If they had some kind of, like what's stopping them from even just having Foundry as a 30-day trial and it automatically shuts off?
Could be a decision, like Facebook at the beginning, they decided to open to a new campus, then to the other campus, and then to the other campus, rather than saying, okay, this is Facebook, let's jump in.
That's true.
So like in the last interview, Karp said that they refused to work with certain clients. I wonder if it is common that they refute clients. Obviously here we are very in the speculative component, but sure. I wonder how much it is them not able compared with how much it is them not wanting.
I don't know. Is there any other stocks you guys want to talk about and talk about something different? Or is everyone talked out?
I'm pretty talked out.
All right, yeah, I can tell Kris. When Kris is talked out, I can tell that we have achieved the goal.
You want to see something? You want to see something interesting? Hold on one second. Can you see my screen?
Yep.
So Databricks recently just had their data AI summit, and let me tell you, man, my entire feed is listed with Databricks getting certifications. Like, dude, they're doing it right. I wish Palantir was doing this, man. Literally, they had all sorts of meet and greets with developers. Their developer community is so strong. Like everywhere you go, they have multiple what is that thing called? And this is all these industries going into it, and then all these people getting certified in different parts of Databricks. So when it comes down to it, the developer community is just growing so much for Databricks, and I don't know. Eventually, this is the kind of stuff that Palantir.
Can they do can they do a lot of what Palantir does?
Yeah. And if they can't, they're figuring out ways to do it right now. The optionality is there. I'm telling you, this is how you seed for the next generation of developers. Everyone and their mother right now will eventually be at one point certified using Databricks. You know, everyone. And it happens in our industry too, right? Like, remember Dom, Microsoft's certified professionals. I was an MCP when I was like 16 years old, right? Mm-hmm. Literally everyone, anything Microsoft, you would get different certification from Microsoft. This Palantir came up with their whatever, what are they called? Certificate. But I don't see anyone with it. No one like shows it off. No one cares.
I
don't even think it. What? Which one?
The number of certifications
for Palantir.
Yeah, I mean, I like alternative data.
Mostly it's in LinkedIn. So you just go to Palantir certifications for LinkedIn. I see internal Palantir employees with it, and maybe like one or two partners. I think the first thing is, in order to get that certification, I think you have to be a partner with Palantir. You can't just go into it and get a certification.
You know,
where Databricks
have to be working with Palantir. So the companies actually that can provide it are 240, 70.
Yeah. Like I said, man, just when you compare
so the day that Databricks goes IPO, is Kris jumping all in?
I already said I'm selling half of my my Palantir position and buying Databricks. You know.
Also, CodeStrap is very bullish on Databricks.
Yeah, I'm telling you, they're doing it right. You need.
Well, if there's anything I learned when I bought my I only bought in like 2 or 3 companies on an IPO day. Snowflake was one, and I got burned bad on buying on the first day. It did recover and get over there, but then obviously now it's half of that. But I'm definitely learned the lesson. We can probably conclude it here. Of one of the lessons I learned was give a company a year of being in the public market before you invest in it, because you will probably get a better price than when it goes IPO, because there's a lot different running a company in the public market for a year than being private doing whatever you want.
Well, the principle is simple. If they do the IPO, it means that they are selling shares, which means it is beneficial for them. If it is beneficial for them, it is not beneficial for you. Yeah.
Well, we'll conclude it here. For those watching Dominating Your Investments, please do jump and follow Kris's channel and Arnie's channel, and find us on Twitter. This has been a lot of fun. We'll cut this up into different segments, so it's not 3 hours, one big video. But we all love talking stocks, and we're all in it for the long haul. So this has been very awesome. So thanks, guys, for joining.
Thank you.
Yep. Anytime, man. Take care.